Hi traders, Bitcoin is reacting to an important technical intersection. So we'll see that, we'll assess the significance of that intersection. We'll have to go down in history a little bit to see the importance of the levels we are reacting to right now. Then we'll see why and when it could regain the 30K level and what to do if it gets there, so we don't get too excited too early. And finally, where it could be headed if it breaks and sustains below the 20K level. In between, I'll share specific price zones to trade and the directional preference for each zone. So let's get it. So here we have, starting on a weekly chart, just that we see the lines here, how they look like on a logarithmic chart. I like to use logarithmic on assets that trade in high numbers like Bitcoin, so we can structure the whole history of the market and find if there are any structural lines that the price is following today that were born in the beginnings of when that market started to trade. And we see that where we are right now here, we'll zoom in on this chart in a few moments, but just that we see the beginning here of this line goes all the way back here to a December 11 spike. So it was once resistance. It has been here a breakout level and then support on two more occasions, the latest one in March 20, where we had that sharp correction from the COVID pandemic-induced crash that we saw in several markets, here in Bitcoin as well. But we recovered very fast from that level at that time, and we traded well above inside this blue channel that is formed by a parallel line to the tops, to these two historical tops, one December 13 and then the famous December 17, which is basically just this market trying to regain a level of resistance in its DNA structure that makes sense for this market. And right now we are on the opposite side. We are on the bottom of that channel, and eventually we could trade lower because the lower part of that channel was already well known for Bitcoin from its beginning. So although we are at a different price level now, the area on the chart is something that is known for this market. So we could very well trade here below. But right now the signals are a bit different. So we'll go immediately here to the daily chart and see what's happening here. So the importance of this level is not only the historical importance from where these support line levels come, but also the intersection with other lines, right? We have an intersection here with this important sub 20K horizontal level that comes traces back here to December 2020. I believe these levels were runaway gaps on the future markets. I don't have the futures chart here, but we had a couple of gaps that were up to today still unfilled. I believe this is one of the areas where we had this runaway gap. Even if there is no gap, which is the ultimate expression of an imbalance in supply demand, we do have a strong breakout here. Short consolidation, and then a continuation, a very strong continuation from here. So that level was key. A lot of players in the market would have liked to enter the market at that level. They were not able to do it, so they got a second chance right now. The market very often, from a technical perspective or an order distribution perspective, offers this second opportunities if you look at it on a 1 minute chart or a tick chart or or monthly chart, it's the same pattern. The market likes to retest levels where it traded just for brief periods of time. It likes to come back to those levels and give the market players a second chance to adhere to the market. Another question is if market players really take that chance or not. Right now, the mood is very pessimistic. But the technical signals, although could still argument that we are in this period of a bearish correction, we are inside this descending channel marked here by these green lines. The importance of this intersection now has to be taken into account. And then interestingly, we have this kind of double bottom here formed with a first sharper reaction here, and then a more rounded bottom here. In traditional chartist analysis, called like an Adam and Eve double bottom. The inclination of the slightly higher lows in the double bottom is due to the fact that the market is reacting to this ascending support. So that is a positive note here. And then we have the minimum objective for this pattern. We have the height of the pattern. I would like to just take that measure here. And where does it take us? If we trace a signal line here on this double bottom and we start trading above, which we haven't still, then the first minimum objective is here around very close to the 30K level. So the market could easily enter this price range here formed by these two horizontal red lines. One of them is an earlier level where we had this low here, then we accelerated upwards. This level was retested here, was broken down in May, and then was retested from the other side. So it was a once support level that flipped into resistance, and that level is confluent with this descending line at the beginning of August. So from now, where we are, or just above this 20K up to 30 and 32,000, let's say, this is a zone where long trades are preferred. I wouldn't short the market here, first because the market probably will try to fill that void and try to catch here with the selling intentions at this level, with this crucial confluence here. So from there, the market could restart another campaign here, another bearish campaign. It could start going down in steps towards these descending lines, or even further below. Okay, we could have this scenario, or the market could stage a different story here, and upon an initial reaction, go above to this other level here of where sellers eventually could try to adhere to this bearish market, take the market down to this range again, and from there buyers could then step in and call that level for them and dominate the market, and then the market would from there rise. Okay, so in between here, as we from where we are trading right now up to that zone, I would say the market will prefer, or will from a risk perspective, will probably give more chances to buyers than sellers. But I wouldn't get too excited here if the market starts to regain the 30 level, because the 30 level from a technical perspective is still seen as a sellable level. Is a market that sellers want to speculate now on the downside, because there is potential, could eventually set shop here and try to push the market down. So how far the market will go down here from the 30 level will also give us some hints if it is likely to break this major blue line here, this historical support, and trade lower or not. On the way up, we do have here slightly this spike here from the 12th May. This could because it was broken here in the beginning of June now. So on the way up, we could see a reaction here. And eventually, this market could, we don't have that technical importance here because we don't have any other intersections here, but the market could also react from here and then invalidate the whole double bottom narrative, right? So the double bottom in traditional terms will be only confirmed if we break the signal line, which is more or less here at 22,700, more or less. Only then we can call it a double bottom, not before. It's just a potential. And if it invalidates, the invalidation of a reversal signal, the invalidation reverses its significance, and it is then seen as a continuation pattern, or could be interpreted as a continuation pattern in that sense. So from there, if we validate the double bottom, we could see then the market trying to recapture here the base of this channel, retest it from above, and then explore some of these levels lower. How far could it go lower, and where are some targets there? Where here we do have this lower support level here, that is this historical area, the whole area here, where Bitcoin could eventually start trading, because it is a familiar area. Even not if we haven't traded there in many years, this is a technical level or technical area where the price already traded in its beginnings. So there is technical significance, and we do have an intersection here. And this intersection, just to see the importance of this intersection, let's just briefly go back to the weekly chart, and we see that there are a lot of lines, but the principle here is quite easy to understand. What we did is we have this series of green lines here that are a little bit steeper than the blue lines. The blue lines is just this mega channel. This is from the beginnings of Bitcoins, and we have also another structure based on these green lines that is slightly more inclined to the upside. And based on this channel, on this green channel here, we can project some Fibonacci channel extensions. And the first one, from this breakdown here in January, we had an importance breakdown here, because this ascending line that we have here, it goes all the way back to the low of March 2020, right? And this line was broken here. And what this line is telling, when a line is broken to the downside, that comes from an important low, the message here the market gives us is it wants to recapture that line. It wants to recapture that line on a horizontal basis. Yeah. So the market might try to recapture here the 4,000, right? But before that, we do have here the next Fibonacci channel extension. We are right now at a 1618, and the next one, the 2.618, comes right here, where these green lines also intersect. And this is by mid 2023, so next year, okay, in 1 year more or less, okay, in 1 year. So we could prolong this bear market for another year from a technical point of view, but first we would have to invalidate that pattern on a daily scale. So in order for you to just have an idea of the areas, just in summarizing here, up to the 32K longs only, and below the 20K on a sustained basis, just not just a piercing and then staging a kind of triple bottom or so, but retesting that level from below. That would be a signal that this bear market can be much larger than probably some market participants are anticipating. On the other side, a more positive note, if we trade above the 32K and we retest it as support, then the future looks brighter for Bitcoin, and we could then start exploring levels like the 50 and 60,000 fairly quickly. Okay, so thanks so much for watching. If you enjoyed it, please make sure that you comment, like, subscribe, and if you would like me to cover any specific market, please let me know in the comment section. Until the next time, be safe.